Jayesh, great having you. Thanks for joining in. What is causing this? What's your prognosis of what happens next?
I think it all depends on, till now we have been seeing last 2 years, right? Like said earlier also, the macros are all great, right? But last 2 years, we have a continuous non-stop sell-off by FPI, right? On an average, it had been around 2,500 per day. And then in last 15 days, it's been around 1,500 per day. And yesterday, again, it's 3,500 was the FPI outflow. So effectively, you're getting almost like $1.5 billion a week out, That's much larger than when you see oil price going up by $20, $30, because that's spread over the years, over the whole year. So that is an immediate impact. And that has been always been supported. Last year also we supported largely at 83, 84 and all that by RBI intervening and RBI giving up their reserves to a greater extent. This along with, we have seen gold import in the last couple of months very high, as well as import from China also has increased, right? And first time we are going balance of payment negative, right? That's where RBI will also have to rethink as to how much they can stand as a wall and keep on spending and spending their dollars. Till the time this FPI flows don't stop or at least become neutral, it becomes very difficult with that and import both together. Is it really worth spending out the reserves? So maybe they may still come back to hold and defend some critical benchmark, but they won't stand like a wall. It will try like a speed breaker.
That's a fair point, Jayesh, and it's reflective of this change in stance. But we're wondering what has happened this week. It seems like the slide over the last couple of days and leading into today has been very, very sharp.
So two things happen, right? Just like equity markets, even on the FX side, people were long rupee, short dollars, thinking that tariff thing will get settled in November and things will happen. Not this Friday, but the earlier Friday, RBI didn't intervene, right, in the second half. And it really let it cross 89. And that's when all the longs has to, now get unwinded, long rupee, short dollars. Maybe people will try to build other way around if this 90 is not curtailed today. And if it is above 90, maybe they may actually start be doing long dollars and maybe wait for some time to create short dollar positions sometime later. But yeah, definitely we have an outflow, right? Let's be honest about it, right? Balance of payment, we are seeing negative almost after 25 years, right, for the first time. So that's the kind of situation we have to figure it out, like how do we get inflows more?
Yeah, exporters not participating as much, Jayesh, is that the primary issue? And even at this juncture with the tariff issues and all of that, the sense that we got is it's not as bad as some people had suggested. Is it though?
It is not really linked to tariffs. That's why I'm saying macro is all good, right? It is the micro, which is like, you've seen in equity, right? All of us, we track the equity outflow every day. It's like every day, non-stop, there is an outflow, right? So even if your trade balance, oil at 100, I'm just giving hypothetical things. It's not that damaging as like this is what is damaging more, which is like $1.5 billion outflow every week. That is damaging more than anything else.
True.
So it's nothing to do with trade, nothing to do with tariff, nothing to do with any of that. It is the sheer outflow.
Got it.
That is now building up.
Jayesh, equity markets are starting, so I'll have to thank you on that note, but really appreciate you joining in and giving us this sense.